It's time for CIBL Biz Tips, bringing you actionable strategies to grow and improve your business. Prepare to become civilized.
What's up, Central Illinois? Welcome to CIBL Biz Tips, where we bring you concepts and strategies to grow your Central Illinois business. Today, we have back in the Zoom recording studio, John DeFreitas and Nick Gentile of Heartland Bank Trust in Springfield. Last session, we talked about what is a line of credit and talked a little bit about the different types of lines of credit for different industries. Today, we're going to talk about, I guess the main question to start off with, John and Nick, is how does a business owner apply for a line of credit?
Nick, I'll let you grab this one.
Okay, great. It's a pretty straightforward process, and I think we've said this a handful of times with some of the different topics we've talked about with bank financing and talking to local bankers. But the biggest thing is to have that conversation. It's just like any other loan. There's a loan application involved with it. You'll end up sharing tax returns both personally and for your business if they're separate. You'll fill out a personal financial statement where you'll list your assets and liabilities. And also a part of that personal financial statement, you'll sign, and this is typically how banks do it, you'll sign to say that you're okay with having a credit report pulled on yourself and any of the other owners of the business. So that's kind of the documentation portion. And if you're buying some real estate, you might also have an appraisal that takes place if your collateral is going to include real estate. That'll be part of the process. But having that conversation with your banker is going to be the most crucial part. We talked about it in the last session, how part of that conversation can be, uncovering exactly what the financing need is for you and your business. But it kind of goes hand in hand with the application process. That'll allow whoever your lender is and your local bank, whatever bank that is, to gather the information they need. Because a lot of the application process on our end of things is trying to accurately paint a picture of what this business does and who exactly runs this business. So a combination of that narrative and that conversation and all of those documents that I mentioned before really go into the application process.
Nice. So a common topic right now, I guess, in any type of lending is interest rates and interest in general. So with a line of credit, how does an interest rate work, and how do you arrive at a particular interest rate for a business owner?
Yeah, so everybody's interest rate is going to be a little bit different. The commercial world compared to just a regular person walking in and getting an interest rate for a car is going to be drastically different. So when you walk in for a car loan or a house loan, there's pretty much going to be a piece of paper that the banker has at their desk, and if it falls in this box, this is your interest rate. Where with a commercial loan, there's a lot of other variables that go into it. It could be the age of your business, the industry that it's involved in, what the collateral is. And basically, just like really any interest rate, the more risk, the higher the interest rate. And so if you're a long-term company with a ton of money in the bank and, really solid equity, sounds like somebody who doesn't need to borrow money, but those types of businesses do have lines of credit, then you're usually going to have the lowest interest rate at that point. Now, we always set interest rates on an index, especially with lines of credit. There's very few instances when a line of credit is going to have a fixed interest rate. Typically, it's going to be an index like the prime interest rate, which is set. The Federal Reserve sets an interest rate, and then the Wall Street Journal publishes what the prime interest rate is, which basically the banks kind of choose. But typically the prime interest rate, you can Google what is the prime interest rate right now, and you can find out what that is, which it's 7.75 right now.
Nice.
So so basically you're going to have an index on top of that. So like a really, really good business might be set at prime even. Whatever prime is, that's what your interest rate is. Whereas if you're like just a regular business, you're probably at somewhere around prime plus 3/4 of a point or 1%. So you might be at 8.75 right now. Whereas if you're a little bit riskier of a business, you know, I don't want to say sky's the limit, but you know, it could be prime plus 2 or, you know, a little bit more. And that sounds really high nowadays. You know, prime plus 2, when prime was only 3.25, was not that big of a deal. You know, whereas when it's 7.75, that's, you know, that's a lot higher of an interest rate. But, you know, those are things depending on even if you don't have as much experience, if you're putting up really good collateral, it might warrant a less of a spread there above the index.
Very nice. So if I'm a business owner and I am looking at potentially applying for a line of credit with a bank, or I have a business credit card handy, what do I need? How do I decide if I should purchase something with this credit card or if I need to go ahead and apply for a line of credit? How do I make that decision?
So we talked about this also a little bit on the last episode, but the biggest thing is the rate, right? So obviously typical credit card rate nowadays, I think, is 22.99%, somewhere in that range. So almost all of them are over 18%. So you're looking at 18% on the low end for a credit card, or you're looking at, as John mentioned, somewhere around, I don't know, maybe 8, 9, 10% on the high end for a line of credit. So you're going to save a lot of money by utilizing a line of credit typically over using a credit card. The benefit to the credit card piece is also what we talked about a little bit, where you have that grace period. So with the credit card, you're not paying business credit card, personal credit card, doesn't matter. If you're paying that balance down every single month, a credit card is a fantastic way to have some funds available. If you're going to have a balance that's going to last beyond that grace period, obviously you're not going to want to pay that interest rate. So what I typically tell people is if it's a short-term purchase that you're going to end up paying off once you have, you know, at the end of the month, once some of your revenue starts coming in, once some of your vendors or whatever customers are paying you what they owe you, then I wouldn't put it. I would put it on a credit card. If it's going to be longer than that grace period, tap into that line of credit. That's what it's there for. It's there to be a similar tool with a much lower interest rate.
Awesome.
Yeah, I would even go a step further and say that very short-term purchases like gasoline or, you know, small items, day-to-day type things that you're just purchasing. Cowboy boots. Yeah.
Yep.
Ostrich cowboy boots specifically.
Yeah. Yeah. Those are going to be probably a credit card purchase. You know,
Right.
If you have to draw on your line of credit to purchase gas, that might be a sign of weakness if you can't purchase your gas as a business. Unless, I mean, if you're running a, you know, whole fleet of semis, I guess that could be different. But usually day-to-day smaller items, credit card. And we actually encourage people to use credit cards because you slow down the time that you have to pay that money out of your pocket, right? You can keep that cash in the account. Like Nick said, you get to use it interest-free, but then you also get those points. Most business credit cards are going to also offer points like a personal credit card. So take advantage of that, especially if you actually have the cash on hand to pay it on time and not pay that interest. That could be a huge benefit. But then, you know, anything that's going to be a longer cycle, if you're buying, like Nick mentioned in the last episode where you talked about buying an air conditioner or furnace, something that's going to be a bigger purchase, you might take a month or two. It might not even just be in order to pay it back, but that purchase might not be installed. You might have to pay the guy up front $10,000 and he's not even going to come install it on your building for, you know, a few months or something like that. So there might be a legitimate reason to use something that's smaller, but more than what you would do on a credit card for sure.
Awesome. John and Nick, if someone wants to learn more about applying for a line of credit, how can they reach you?
Yeah. So LinkedIn, our website, you can get a hold of us, our email addresses, our phone numbers. I'm sure you'll throw those in the notes there. But yeah, absolutely. We're stopping to see us. We're at MacArthur and Ash in Springfield.
Awesome.
Yeah. If you can't come in person, LinkedIn is certainly the best way. I understand not everybody has LinkedIn though. Like John said, on the website, you can find our phone numbers too. So if you can't come see us in person, those are the two other ways that I would say are the easiest to get a hold of us.
There we go. For all you listeners out there, make sure you're subscribing to the CIBL podcast on your favorite podcast platform. While you're there, please leave a review. You can also follow us on social media, mainly Facebook and LinkedIn, and you can connect with Garrett and I there personally as well. Until next time, y'all been civilized. Take care.
Thank you for listening to this episode of the Central Illinois Business Leaders Podcast. You can find us on Facebook at facebook.com/CIBL podcast. You can also follow us on LinkedIn. Don't forget to subscribe and leave us a review. It's the civilized thing to do.